Good morning, ladies and gentlemen. Recent sell-off in gold poses a big question about the future of gold miners. Today is November 25th, 2020, and I would like to cover senior gold miners, GDX, in more detail. This is GDX weekly chart. The index peaked in September of 2011, reaching almost $67, which coincided with gold peaking at $1,920. Following that, both gold and GDX entered a multi-year correction. Even though gold lost around 50% from its 2011 highs, GDX gave back the entire gain. Gold miners are quite leveraged, so they tend to move much more than gold. Since 2013, GDX has been forming a 7-year base. During the basing period, GDX key resistance was formed at $31 to $32 level. 4 major attempts to break a major resistance standing at this level resulted in failure. Until May of 2019, GDX finally broke out from a 7-year resistance and advanced till $37. Retraced back to $31 level to retest the broken trend line, held at retest, and advanced to over $45. I would like to move to daily chart in order to discuss the most recent formations in more detail to demonstrate that markets always follow a certain logic, even though formations may not always resolve successfully on a standalone basis. From 2016 till 2019, GDX has been trading within the following parallel channel formation, which was resolved in the June of 2019 by breaking the upper band of the formation. This led GDX to advance to $31, where it started to consolidate with a perfect triangle shape formation throughout the last quarter of 2019. The triangle shape was ultimately resolved in December of 2019, when GDX broke the upper band of the triangle shape formation and retraced to retest, and took off until $32. Exactly when entire setup was in place and was expected that GDX will make a new high, the index got obliterated, falling 50%. Interestingly, the index was dead stopped at just over $16. Coincidence? No. If we extend the lower band of the 3-year-long falling parallel channel formation, we could see that it acted as a critical support level. Once this point was tested, GDX took off, rising from $16 to over $45, adding over 180% gain. Our most recent flagship formation was invalidated yesterday. Flagship formations are normally a bullish continuation pattern. However, in rare occasions, markets turn upside down, invalidating any model or formation. Yesterday, GDX broke the lower band of the formation, invalidating a 3-month-long pattern. So, where do we stand now and what we shall expect next? If GDX doesn't manage to rise back into the flag shape formation within a day or two, then we could confirm that this pattern is irreversibly invalidated. And in such case, we shall seek for another support level. Next support level for GDX comes at $31 to $32 level. A critical level that acted as a resistance for 7 years should now act as a support. If GDX declines till this level, that would represent around 30% decline, which is still a healthy correction within the bull market. Therefore, I believe that GDX will hold at this critical support level with higher likelihood. Although I will have to readjust my $55 target for the GDX from the year end of 2020 towards the first quarter of 2021. Thank you very much for listening, and please note that this video is not an investment advice and prepared solely for educational purposes.